What is good, everyone? Welcome back to Nate Trades. This is week number 9 of documenting my journey to becoming a consistently profitable day trader. Every week, I will walk you through all the trades I take, the winners, the losers, and all the lessons I take. So let's get right into it. This week, I took 5 trades. I took 1 win, 3 losses, and a break even. Unfortunately, one of those losses should have been a break even, and the break even trade I took should have been a winner. But let's get right into Monday. All right, so this is the first trade I took. Let me quick explain it. Okay, so going to the higher time frames, I was leaning extremely bearish. We had an SMT here at all-time highs with ES taking it out and Q didn't. And then we displaced lower and inversed a bullish 4-hour right here, creating a bearish 4-hour. Now, we did have an SMT at previous day low, but because of the overall SMT at all-time highs, I wasn't really worried about that. I was leaning bearish, and yeah, we had some great draws low. We had a 4-hour, we had a low very close to the 4 hours, so like relative equal lows, and then we obviously had previous day low here still on NQ. So I was pretty much just looking for a short setup from this 4-hour or from tapping into a 1-hour. All right, so what happened at market open? We displaced higher, disrespecting this 1-hour bearish right here. And at this point, when we just displaced higher, I was leaning long. Why? Because if this was a retracement, I was expecting, if there were going to be a high time frame retracement here to take a short, I was expecting it to, respect this 1-hour for value gap and, not displace so much higher on the Fibonacci scale. So I was looking for a retracement to around 0.5. But we displaced higher, and at this point, I said if we were going to go this high, we probably will take out previous day high again, and we will probably just keep running. Okay, going to the first trade that I took, after we had made a move up here, leaving the 1-hour intermediate high here, and previous day high and relative equal highs higher, great strong draws of liquidity higher. I was looking for a sweep of this internal low here while still respecting this 5-minute fair value gap. I got no displacement here. There was nothing clean. You can see it's just chop. So I couldn't take a long off that, obviously. So what happened? We got a resweep here. Actually, ES did an SMT here. ES swept out the low, and Q did an SMT. And then we got another small SMT here between these two lows with ES resweeping. So yeah, this was the trade I took between the high and the low. The highest time frame fair value gap was a 30-second. There's actually 2 of them, one here, one here. So I entered confidently with good displacement here, targeting just about 1-to-1, and with my break-even level at this 5-minute, because my thought process was if we're going to be very bullish, we should run through this. If we're going to be bearish, we should at least hit the 5-minute and go lower. So it was a risk-free trade idea. So unfortunate that this one lost, but let's get right into the second one. Okay, so this is the second trade I took. After we remanipulated lower, we swept out the internal low here, and the way I saw it was we made a move down, move up, a resweep which took out the internal low, and then the highest time frame for value gap in that leg was this 30-second. So I entered long after this 30-second IFVG with a break-even level at the internal high, the high of the leg that swept liquidity, and this one was brutal because you can see it doesn't look like it hit me break even, but unfortunately when I moved it, my stop loss to break even, I had it like a tick or so above, and then it was just brutal. It wicked me out barely, and then it ran to TP. So super unfortunate. Again, I was just targeting the 5-minute here, which would have been about a 2 RR, which would have been an absolute banger. Super unfortunate, but let's get into the next day, Tuesday. All right, so getting into Tuesday. Now, Tuesday was CPI an hour before market open. So let me quick explain how I trade it. But basically, CPI is a red folder news event, which is super sporadic, I guess you could say. There's a ton of volatility in the span of like a minute. So it's very easy for passing accounts. It usually just booms in one direction. There's either a super bullish candle or a super bearish candle. So the strat that I back tested and that I did it wins like 95% of the time over the back testing that I did over like a year or so span. So basically 30 points above where price is currently trading at, I'll put a buy order, and then 30 points below, I'll put a sell order, and then I just do a TP of about 50 points. So that's exactly what I did. It said that I won. It was awesome. I was like, okay, I passed some accounts. And then when I got into live trading, so I won't really talk about the trade that I didn't take, or that I tried to take on Tuesday here during the regular session, just because I couldn't trade it. But um, yeah, for some reason, when I tried to place my order, I got this. It just said market order rejected, and it said my account was set to liquidation only. And I was like, what? I literally passed the account. Like, I took a screenshot. Like, here you can see this one's at 53K, this one's at 54K. Most of these are, the drawdown is, like, the account balance is fine, and the drawdown was completely fine on every single one of them. And so I was like, what the heck? So, I couldn't do anything about that. Unfortunately, that meant I didn't get to trade Tuesday. I did email the Apex Trader Funding team, and for some reason, they said that I blew my account. I guess the drawdown was about 300 bucks, and I did it with 5 minis here. So they said that somehow magically I blew my account. It's stupid, but it is what it is. The strat still wins. I'm just gonna do it without a $300 drawdown next time, which is fine. But yeah, anyways, that's the strat for CPI, and that's what I performed on Tuesday. Let's get into Wednesday. Okay, so getting into Wednesday, this was the trade I was looking to take. It was a continuation short, but let's get to the higher time frames first. So again, on the higher time frames, go here. On the higher time frames, this is how it looked entering the day. SMT with all-time highs, like same as before. And then pre-market, we had inversed this this bullish 4-hour fair value gap right here. So at this point, I was leaning extremely bearish. We had these relative equal lows, the 4-hour, and then this low, very close to the 4-hour. We had significant sell side here, and then another low right here. So entering the day, I was looking for just a simple short. So this is how it looked on the 1-hour as well. At market open, we just displaced lower, and we were just clearly trending lower. Like, it was obvious, it was just super obvious. After we just kept displacing lower, we left relative equal lows here. We left those still intact, and we retraced up into this 5-minute fair value gap right here. Quick show you that. Boom, 5-minute fair value gap right there. So simple continuation trade here, and then immediately after tapping it, we displaced lower. So it was the continuation model with draws of liquidity right there, and unfortunately this one got stopped out. Now, after it got stopped out, and since then, I've made a rule actually because of this, and then it applied on Friday. It saved me from a trade on Friday. So what did I learn on this one? Super obvious. We're just dumping, right? We're clearly going to this draw of liquidity, but this retrace is almost nothing. Like, we barely retraced right here. Like, this is not a very big retracement. So I added a new rule where if we retrace into a 5-minute fair value gap that's super premiumed in the leg, being like we didn't discount, we didn't retrace much in a discount for shorts, I'm not going to take it unless we retrace into something that's more discount, like you see of the overall leg. This 5-minute fair value gap here would be more discounted, or if we move up, hit the 5-minute, go, make a small move down, re-sweep, then I'll take the trade. So a new rule added for me, a good lesson from this trade. And yeah, that's exactly what happened here. We moved back up to the more discounted 5-minute, and then we displaced lower. So, and then we did take out the draw of liquidity. So I was right, and a fire lesson and a fire new rule for my trading. So I consider that a banger day. Let's get right into Thursday. Okay, so getting into Thursday, I did take one trade here. It should have been a break even, but unfortunately was a loss. So I'll explain it, and let's go to the higher time frame first. On the 4-hour, we had swept out. We had taken out these lows here and respected this bullish 4-hour, and then we had displaced higher. So super obvious bias entering the day, super bullish. We had clear buy side liquidity up here. So yeah, so that was what I was looking for. Entering the day, I was pretty much looking for a retrace into any fair value gap to take a long, just a continuation long, 15-minute and above. So at market open, what did we do? We went down to this 15-minute fair value gap, respected it, and then we got a clean 5-minute inversion right here. We got a clean 5-minute IFG respecting this 15-minute with clear draws higher. We had a 15-minute fair value gap right here. 15-minute fair value gap right here, and then inside the 15 was a 5-minute, which I targeted to get a positive RR, so 1-to-1. So this was the trade setup, simple, uh, tap of the 15, 5-minute inversion, entered. Now, how did I get screwed on this one by TradingView? So literally I entered, got a fill on the next candle. It literally went up, wicked my break even. So I was trying to go break even. I was literally dragging my stop loss to go break even, and it wouldn't move. It wouldn't move. And I was like, bruh. So unfortunate about that one. I couldn't do anything about it. And then I just had to suck it up and take the loss. But yeah, nothing that I can do on that one. That was just a TradingView glitch. And then the market, after that one, just kind of chopped around for the rest of the session. So I stayed out. I didn't do anything. And yeah, that was actually the last trade that I took this week. I didn't take anything on Friday. I was super disciplined. I thought Friday was actually a super banger of a winning day for me because I stayed out of some losing setups that I previously learned lessons on. And then yeah, I was just super confident in my draws of liquidity, and when things didn't happen the right way, when setups didn't present themselves correctly per my strategy, I just didn't take anything. Something that I learned, something that's helping me with my trading, is using this brush tool actually. So when I'm looking for a trade, I'm pretty much like, let's say I'm bullish. I'm looking for a move down and then a move up, or I'm looking for a move up, continuation long. And so this has helped me actually to stay out of chop. Like right here, I was looking for a sweep of this 1 hour to maybe take a long. So what did I do? I did this. I said, well, I'm bullish towards the highs. So if we go down here, I'll take a long off that. Or if we just, like we were just chopping around, or if we go up, I'll look for a continuation long. So that helped me a lot this week, actually. I'm going to keep implementing that because it's helping me to stay locked in. And as soon as price hits a level, I'm not like, ooh, should I take this? Does it look good? I'm like, no, I'm decisive. I'm using my drawing tool to prepare my mind as price gets to that level. So yeah, that was something valuable that I learned this week. And yeah, that was it for this week's trading. Let's get right into the lessons. Okay, so again, yeah, I just had 5 trades, 1 win, 3 losses, and a break even. The break even should have been a win, and one of the losses should have been a break even. I did fade 2 trades on Monday because I was too focused on the influencer that I was watching, his conviction in it, and not on my own rules, which since Monday I've been insanely locked in on that. So that's a win that actually helped me the rest of the week. Yeah, I focused on having my own conviction for the rest of the week and only using the influencer as a confluence to my trades and not just using him as like a signal bot, basically. On Thursday and Friday, I was constantly prepared with 2 or more scenarios in mind, like I just showed with the drawing tool, for when I will take a trade. And yeah, I said using the drawing tool helped me. I added a new rule to my strategy. Retracement must be either to a fair value gap around 0.5 on the fib, so no premium fair value gaps, or a resweep of the higher low on the premium fair value gaps. So yeah, what did I do right? I improved in having my own conviction for trades. I got better at being prepared for scenarios in which I will take a trade, and I'm getting better at full porting CPI. So it's just unfortunate that Apex kind of screwed me on that one. And yeah, and then I also added a valuable rule to my strategy. What did I do wrong? I trusted another trader's conviction and missed out on a winner. That was on Monday. And there was actually 2 different trade setups that I was like looking to take, but the guy I was watching didn't take them, and so I was like, nah, I'll just listen to him, and so that was super unfortunate. What will I do next week? I will continue to be prepared for scenarios in the market using my paintbrush, the drawing tool, and stick to my strategy that I know has a winning statistic. So thank you guys for watching this week's trading recap. If you want to stay followed along with my journey, hit the subscribe button below, and I'll see you boys next week. Peace out.